Hi everyone, today let's take a look at Netflix earnings, then we'll take a look at all the normal data and charts and hopefully make some better trades tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Netflix hung in there pretty well. They beat earnings estimates, membership rose by 34% in their ad tier, and you can see they're basically flat after hours, which is basically a beat for Netflix. They usually have a massive up move or a massive down move, very volatile stock, membership rising 16.5%. And Netflix did have a good iteration here, so let's take a look at it. Earnings per share $4.88 versus $4.74. Revenue $9.56 billion versus $9.53. Total memberships 277.65 million globally. Absolutely massive membership base. And then you can see estimate was 274.4, so beat on that. Everything is good. Up 17% from a year ago. The stock has been on a massive run. We'll take a look at those charts later. And it needed to perform this well just to maintain current price, and it still dipped immediately on earnings, but they were able to maintain their forward guide, and the stock was able to bounce back a little bit. You can see that run from around $470 all the way up to that $700-ish mark, and the CEO was out saying that they have a ton of new content, which is exciting users, and also advertisers are liking it for that same reason. So another good stock out there, and Bridgerton is pushing Netflix stock higher. Moving over to Fear and Greed Index, 51 from a 53 yesterday, so continuing to crater here after we had that lower high from this previous high. Everything looks terrible. Markets looked pretty terrible, going straight down. You can see on momentum just how extended we are from that 125 EMA, sitting all the way down at around 5,200. Strength continues to rally though, which is interesting. Breadth also rallying, so those are still interesting. Put call ratio starting to tick higher. We talked about that peak low that we had, and you can see last time we were here, mid-December, rallied all the way up to that 0.94 area. Would expect this to continue to do that, and we are very depressed, so that would give you a lot of room. And then volatility, extreme fear. We talked about it yesterday. We've been talking about it all week. Expected this to jump at least to the 14 to 15 area. Jumped all the way up to the 16 area, so we'll look at that. And then safe haven demand, still sitting in regular fear, while junk bond demand just refuses to move. Moving over to seasonality, we'll take a quick look at it. I've been skipping over it because this says bullish and markets look terrible, but understand we're supposed to be peaking here today on the 18th. Then we're supposed to get a little bit of seasonal weakness, flat markets, maybe bearish markets. So bearish markets already coming in. Maybe we're seeing this here already. It just came a little early. And then we could see a rally into the end of the month based on that election year calendar, but I just don't expect that. So we'll see how it plays, but more bearishness to come, and then maybe a rally into the end of the month. Moving over to those earnings calendars, Netflix obviously beat. Abbott Labs, they beat as well. That was good. Domino's Pizza beat on the bottom line, missed on the top. Pretty good beat there. $4.03 versus $3.65, so that was good for them. Alaska Airlines missing on the top line, beating on the bottom. And then for tomorrow, American Express, SLB Oil Company, Travelers, Halliburton, a couple other oil companies. And then for Monday here, we have Verizon. Before we get into those heavy hitters, Microsoft, Google, Tesla, Visa, Coca-Cola. Moving over to the economic calendar, ECB held interest rates flat just like they expected to. They very rarely surprise, so you like to see that. Initial jobless claims ticked higher. Interesting. So we've been seeing this come in a little bit worse than expected for a bit now. Unemployment rate also stepped higher. Previous read was also revised higher. So jobs market continuing to show very incremental weakness. But then Philly Fed manufacturing, massive beat there. 13.9 versus 2.7. Many times bigger than what we expected. Interesting there. And then 10-year tips, 1.8, previous read 2.1, so 10-year inflation expected to go down, and then Fed balance sheet selling off nearly 20 billion, nothing crazy. And then for Friday, nothing on the calendar. Moving over to Max Payne, you can see Max Payne still sitting at 545, stock price 553.83, so it seems like we could have a little bit more downside. Put wall 530, so way below price. Some puts here at 550, a lot more at 545, so we'll see how this plays. 550 is probably going to hold. I could see a finish between 550 and 555, which is basically where we are. Right in here makes sense, 551, so could see a little bit more selling. Put call ratio, pretty neutral there at 2.7 based on what we've been seeing. Total options, 2.5 million, which is actually pretty low for a third week options expiration. So we'll see how this plays as we go into tomorrow's session, but understand we're probably not going to go too much lower in my opinion. Moving over to the charts, you can see those two really big days of selling, massive down day, 1.4 yesterday, and then another one here, 0.7, which is right on the money. So we usually expect that second day move to be about half of the first one. So sure enough, that is what we got. The wick low was much lower. The low of day was all the way down at 550.43, which is right in this range here, 550.12. Didn't quite touch it, but came up a little bit short. Held the trend line here, held that 21 EMA VWAP. Momentum still bearish, so there could be more downside potential here. But this is a zone where you could find some support. Maybe this is the initial dip, looking for a double top or a lower high setup. If it's going to happen, this is probably the down move. You can see we actually got a decent move into the after hours, decent upward volume on that last candle of the day. So worth mentioning, could see a little bit of a swing high, and that is kind of what I'm looking for in tomorrow's session. Moving over to the Tasty charts, you can see we're still in bullish conditions. We haven't touched that trailing stop quite yet at 548.76. Did hit the 21 EMA, did hold that level. Big volume over the last 2 days. Momentum stepping down here today, not great there. And then you got that 34 EMA sitting at 546.39, so right in that range. And like I said, I do think this is a zone where you could see a bounce to a lower high or a double top. And then looking at that 4-hour chart, you can see we hit the lower range. We kind of expected that. Lowest ATR band was 552.44. Held that level. You can see we overthrew it pretty substantially. Held the ATR, saw a little bit of a bounce. This is where you start to see that grinding price action. So the big move down, hold, big move down, you've hit resistance. Then you'll see what happens here. Could grind up to the middle, right in that 558 area, and then sell some more. Momentum, still bearish, still big volume on the selling. So doesn't mean that we're going to see a reversal or a push back into bullish conditions by any means, but you could see a short-term bounce. And then you have ATR resistance there at 562.79. Moving over to the NASDAQ, you can see a very similar thesis, 3% down and then about a 0.5% down, so much better than your 0.5%. You'll notice we did gap higher and then fall, hit my next level at 477.69, tested that level on a double bottom, first test, bounced, second test, double bottom. Looks like we're going to see a little bit more of a push higher. 481.94 is my next level. If that breaks, you could see a push to that 486 area, but similar thesis here on that medium term. You have a top, big dip low, look for a lower high or a double top maybe. Probably not a double top. That would be a pretty substantial move. Another $20 up to that 500 level, but lower high seems to make sense. I don't think we're just going to waterfall sell off without any pullbacks, even with the kind of price action that we've seen. And that double bottom here today did give me a little bit of confidence to take a slightly more bullish position in tomorrow's session. And then looking at those Tasty charts, similar move, big move down, hit the 34 already. That was at 479.43, held that level. Volume still big, but not as big. Momentum still bearish, nothing crazy. Lowest ATR here is at 468.44, so there's still a lot more room to that potential downside, at least on the daily chart. ATR is still resistance here at 507. I don't think we're going to get all the way up there. That would overthrow your all-time high. That's why it's up above there. So ATRs, that's your zone. But you could see a pullback into this range, give you another opportunity to get some more shorts, and then see what happens in tomorrow's session, and then see what happens after that. And then looking at that 4-hour chart, here's a good example of what I was talking about. So you see a push down to the lowest ATR, get a bit of a bounce, mid-range, pull back to that lowest ATR. Sure enough, that's what happened. Got a bit of a bounce, pulled up a little bit, hit that 8 EMA, lowest ATR, overthrew it. Now we're seeing a little bit of a rally. So we're definitely extended, which usually you get a little bit of a bounce. We'll see how strong of a bounce. Maybe we could test that 89 EMA up at 487.61. Look for a test in that range. That would be interesting. That should garner at least enough bullish momentum to get some more sells, and then we'll see what happens from there. Push back to that lowest ATR band down around the 477 area. So everything at this point looks bearish to me. You can see ATR is pushing to the bear side, hitting that lower band repeatedly. Definitely a change of conditions, continuing to see resistance, and then that ATR trailing stop 491.93. Moving over to the Russell and the Dow, these showed a little bit of weakness here for the first time in a bit. Russell was down 1.93, Dow was down 1.28. Hit some key levels. We talked about the Russell hitting 226.02, touched that level, gave it all back. Then you can see we gapped down and fell down to this trend line, momentum stepping to bearish. So we'll see what happens from here. This is a critical zone. If it holds, we'll be in good shape. If it doesn't, could be quite weak. After hours, we got a little bit of a bounce, but that momentum step down is definitely concerning. This is a pretty classic topping pattern. Big push up, big wick rejection, big confirming candle engulfing the previous two candles. We also got a gap fill here off of this gap and go. We filled it on that wick there, so we got the gap fill. We'll see how that plays. Again, could hold this zone, could pull back some more. Even if it does, I would expect a lower high setup and then another rally. And then looking at the Dow, hit this trend line here, marks the same top here in May, hit that level, rejected down, could see another move down to this lowest area. And we've seen this a few times, push up, reject down all the way to this lowest level, continue to rally up. And your next support would be down around that 398.76 area. If it held that as support, that would still be a substantially higher low, and it would also not break this structure here as a test of that previous high, and then we can see what happens from there. So either way, both of these still look okay, just a pullback in an overall bullish structure. Moving over to stocks that moved today, we got Domino's Pizza. We talked about it in the earnings. Absolutely dumpster fire here, 13.5%. It had a massive run here. You can see the lows back in October, November was down around $337, and we topped out at $537. So $200 a share on that run. Absolutely massive for Domino's Pizza. Remember, this is just a fast casual restaurant making massive gains here over the past couple of months. And then once the structure broke here, we kind of knew it was all over. Once that structure broke, if you made that kind of a trade, down 10%, good move there. And then you kind of knew this setup was coming going into earnings. Massive gap, 13.5%. Huge volume, 3.1 million, which is big for Domino's Pizza. Their average volume is closer to 500,000, so many times their normal volume. But this looks interesting here now. This stock is still valuable. You can see we're back here to the highs from August of 23. $400 could be a critical zone, maybe something to watch there. Obviously, it's a dumpster fire right now, but it might not be forever. And then looking at Goldman Sachs, I think we talked about this one on stocks that moved before. We've been talking about this run. We talked about this resistance here. Hit the lower trend, rallied right back to that same trend. Pretty sure we mentioned it. If not, we hit the trend to a T, sold off from there. Again, classic breakdown. Actually looks very similar to that Russell structure. Big move up, big wick rejection, big engulfing candle. Hit the 9 EMA, 484.37, so it could hold that. Maybe continue this uptrend, hit it one more time. But momentum stepping down, RSI breaking down, big volume there at that peak. And Goldman Sachs is probably going to sell off a little bit more with trend support sitting down at 461.72. Moving over to Netflix, you can see it's had a massive gain, 548 or so on the low in April, rallied up to 700. And then before that, you can see the most recent low was back here in October of 23, was all the way around 350. So it's doubled since then, 100% run up to that 700 area. Since then, it's actually pulled back a little bit, 650 area, holding trend support here. Needs to hold that level if it's going to bounce back up to 700. If this structure breaks, 614 would be what I would look for because this would be combined for me. It's too close. So 614 back into this consolidation. And then if that breaks, you got the 144 EMA down around 596 or so. Moving over to Apple and Microsoft. Absolute dumpster fire here for Apple, down 2%. Talked about this trend, needed to hold it, didn't do it. 21 EMA sitting at 221.02. That's probably your next price target. We'll see how that plays. And then trend support down at 217.78. Momentum bearish, RSI bearish. Really no volume on this selling, which is interesting. But I would expect it to continue at least a little bit lower. We'll see what happens. We've broken the structure. We haven't been out of this structure for a long time, and it definitely looks weaker going into tomorrow than it did today. And then Microsoft here, down 0.71, very close to that 55 EMA. That was our price target going into the day, 433.38. Just barely missed it. Low of day was 334.40, so could have looked for a buy there, but being patient, I would look for that 55 EMA. Moving over to Tesla and NVIDIA, given what markets did today, these held up really well. 0.29 to the upside on Tesla, and NVIDIA, big jump, 2.63%, wicked the same lows from yesterday, but held that level. I still think this structure is going to break. You still have a clear lower high, and this low was lower than that midpoint. 55 EMA sitting there at 113.03. I just can't imagine we're not going to touch it. NVIDIA can do weird things, but I don't think it can overcome this structure. It is bouncing a little bit after hours. Maybe you retest 125 and then you push back down. Again, short-term bounce could fit with the overall thesis. And then Tesla, not really giving you any clear guidance, probably waiting for these EMAs and SMAs to consolidate, so probably more sideways choppy action. Resistance is 255.44. Moving over to Meta and Amazon. Meta caught a bounce, 3% up. 144 EMA was the zone we talked about yesterday. It did overthrow it, so that was technically bearish. Really couldn't trade any of this because it was such a massive gap up overnight, so not great. Doesn't give you a lot of room. You had to be in last night to catch that move. But 144 EMA did wick that low, so it would have given you a better entry there. and you can see that rally up pre-market, retested VWAP down here at 465, and then you could have caught the rally. Potentially, either way, 144 EMA. Holding as support. We'll see if it can continue to do that. And then Amazon, big down day, 2.22%, 181.41. We talked about that. We talked about that being the next price target, and we just missed it by 4 cents. So 181.45 was the low of day, 181.41 was the level. So just missed it. Could argue that it touched it, and my level's just off by a few pennies. It's not an exact science. I would call that a touch. Momentum bearish, RSI still bearish. Moving over to staples and discretionaries. Staples actually got a down day, 0.5. Wicked a new high at 79.15, but couldn't hold any of those gains. Inside candle, that's not great. We're still at these highs back here from May. Maybe we see a little bit more selling tomorrow. And then discretionaries continued the downside, hit the price target 189.38. Now we'll see what happens. Is it going to hold this support? Probably not. Momentum bearish, RSI bearish, probably going to push that 21 EMA. So I'd put that price target there at 186.75. And then looking at financials and oil and gas, financials finally getting a little bit of a sell-off. It's been an absolutely massive run here, down 1.21%. We saw it on Goldman. This is probably going to have more selling here. Previous high was 42.41, so maybe in there we find some support. And then looking at oil and gas, we talked about that massive wick rejection yesterday, got more selling here today, broke the trend line. So this is probably headed back down to that 145.92 area. That was the area where I was looking for another pullback, find a higher low, and then see what happens. You can see my alert there. I was looking for a move here. I do think once we get there, we'll find some support, and then you can look for another trade back up to the upside. So we'll see how that plays. Maybe we get another entry on oil and gas stocks. Moving over to oil and gold. Oil gap down and fell going into the Friday candle. It was bearish on today's candle as well at 1.87 down. So this is broken, broke this trend line here, retested it, broke down more, probably more selling back down to the 200 around $78. So at this point, we have a change in structure, broke that trend line on a closing basis, going back here to Tuesday, and now we've gapped through the level. So that looks bearish with the 200 as your price target at 78.86. Then gold, 2 bearish days in a row, but it's still holding the level. 225.09. Maybe we get a touch there. Momentum, stepping to bearish, RSI still okay. Maybe we look for a retest of that SMA and then we could get another swing up from there. But it's not quite positioned for that yet. So I'd be patient even if you're trying to get long. The thesis is still long, but looking for a little bit more pullback. Moving over to RIOT and Marathon. We had the inside candle. That's a bearish setup. Got a bearish candle. Makes sense. 11.8% to the downside. Similarly on Marathon, inside candle, big down move, 7.4. Momentum stepping to bearish, RSI still could hold. Similar setup there as we talked about on gold. Touch the SMA and then bounce. Similarly here on RIOT, could have the same setup, higher low setup right in this zone. We'll see how it plays. I would expect at least a little bit more downside, maybe a wick low and then a potential push. But these stocks have actually been behaving basically like they should. So we had the hold, got the push up, inside candle, got the continuation. So if it continues in this trend, we should get a downside, higher low, and then a push. Moving over to breadth, this is definitely concerning. Looks like a lot of the charts we've been seeing, 2 down days, probably going to go a little bit lower tomorrow. So market breadth definitely fading. That's probably going to bring down the Dow and the Russell a little bit more in tomorrow's session. So keep that in your calculation. And you can see this topping pattern looks very similar to some of the ones we saw. Big up move, wick rejection, big down move, fully engulf. Not great. Still have a level at 68.66, but likely to break in my opinion. So breadth fading, indicating some market weakness to come. And then moving over to the dollar. The dollar finally found some buyers here at that 103.64 level. Up 0.42, momentum swinging to bullish. Could see a little bit more dollar strength after this big down move. If we did get a decent pullback, it'd be up to that 105 area, hit some trend, retest that zone, hit the 55.21, all in that same range. It's definitely extended. Got very low there at 31. That's pretty uncommon for the dollar. Last time we were that low, we got to a 32, and that was all the way back here in March. And then zooming further out, the last time we hit a level that low was back in December after this really big down move. So those oversold conditions do not happen on the dollar too often. This is still a change in structure though, with a high, low, lower, low. So I would expect sellers to be in that area. Moving over to bonds, selling here makes sense. More down move, momentum stepping to bearish. As bonds sell off, you would expect equities to move with them at least a little bit, especially J&K. It's been a pretty good precursor. You can see that move along with equities, showing some selling, probably more selling to come. 94.82 would be your support area. We did get back to these previous wicks from December, but looks bearish. And then similarly here, TLT, you have a high, lower high now, breakdown here. Momentum stepping down, RSI probably stepping down. 92.82 is the next support area. Then we'll see what happens there. Moving over to volatility, move index, low, higher low, looking for a little bit more rally, makes sense. Bonds are probably going to sell off. The structure shows it. And then the VIX. So we talked about getting into that 16 area. High of day was 1643, so we hit that initial target, got into that same range. We talked about this zone here from the beginning of April. Touched that area, we'll see what happens. Are we going to reject from here and sell off, establish a higher low, see what happens? Last time we got here, we did have a couple of days of selling, and then we got another spike higher. So certainly possible, could look for that. Sideways choppy, little dip, another rally up into that 18. This got all the way up into the 21 area before we saw that bigger pullback on the VIX, so probably more room to the upside to come. It is worth noting though, we are overbought at 72.99, and you can see on that first push, we got up to 67.2, pulled back, test the SMA, pushed up to those overbought conditions again. My guess is that's what we're going to see here. Get a little bit of a pullback, hold support, and then push up. Moving over to my accounts, you can see I stayed basically flat. I made a little bit of money, but not a lot. My Q's position made money. I was short going into the day, so that worked. But my Russell obviously lost money there. It was down $4. That's a lot to mitigate, even though I was already in the money on my calls. So I rolled in and down to 219 for tomorrow. It was down at 218, bounced a little bit after hours, still plenty of room up to 219, and I sold that for $1. So max profit is 220.15. Totally fine with that. Honestly, if the shares go, I'll probably let them go and then try to reestablish. And then Qs, I did dip my toe back into a little bit of bullish. Sold some 478s and 79s, one of each for tomorrow's session for $1.72 and $2. So pretty decent on the credits there. That was pre-Netflix earnings, so that accounted for some of that risk. And then that was good. So we bounced up after hours up to 481.19, had some positive deltas, so that'll be good. And then 486 for my calls for Monday for $1, pretty far out of the money. If we see some levels break and we actually hold those gains, I might buy some shares, turn that into a covered call for the Monday session. But either way, very slightly bullish on both of these positions going into tomorrow's session. Let me know down in the comment section what you think of Netflix earnings. Is it an opportunity, or has this company stalled out at least for the short term? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.